If you are a homeowner and have a mortgage, chances are you have a 30-year mortgage, or you started with a 30-year mortgage, or if you're thinking of buying a house, you're probably going to end up with a 30-year mortgage. And the question we get asked a lot is there a way to pay off that mortgage earlier? What can I do to pay it off earlier so I'm not stuck with a 30-year mortgage, paying the mortgage every month for 30 years? Well, I'm excited that you're on my channel. In this video, I'm going to give you one simple trick, although there are many tricks, that you can pay every month and knock off 10 years from your mortgage payment. How would you like that? Let's get right into that. Well, I'm going to be honest up front. Paying off your mortgage earlier and faster is no easy task. So you may have to be very committed to achieve this goal, whether you want to pay off your mortgage 3 years earlier, 5 years earlier, or 10 years earlier. Or you may want to pay it off in 15 years if you have a 30-year mortgage. So it takes a lot of commitment and a lot of discipline. But when I'm going to show you this trick, do what you can or implement what you can. And if you can't do it, either way, you're going to save maybe 11 years instead of 10 years, or you may save 7 years instead of 10 years. In either case, to get started early, to be disciplined and committed is what it's going to take to pay off your mortgage earlier. Now, some of you may want to say, well, why would I want to pay off my mortgage earlier and pay extra payments of principal, which I'll talk about, and which is usually the case. So before I give you the trick, what it's going to take is to pay extra payment per month regularly to pay it off. And I'll talk about the exact amount you need to pay on a loan amount. But some may argue that, hey, if instead of me paying $100 a month or $400 a month or $500 a month extra every month as principal, why don't I invest that in stocks or bonds or save it for another property they can buy in 4 or 5 years because I'm saving $500 or $1,000 a month or whatever, which is a valid concern, valid argument. You are okay to do that. So whether you pay off your principal early so you can save mortgage payment, or whether you save that extra money principal every month and put it in a savings account or an investment account so you can buy another property, that's valid as well. But we can go one step further and say, okay, you're gonna pay extra amount every month towards paying your principal, extra principal, so you can save 3, 4, 5, 10 years on your mortgage payment. But why not at the same time invest the same amount, $100 a month, $50 a month, $400 a month, $1,000 a month into a stock account or a brokerage account, buying indexes or stocks or mutual funds and saving it for the investment property. So you can do both, you can do one, or you can do either or. This is just an informational video. So let's get right into it. How can I knock off 10 years, up to 10 years from my mortgage payment? So in this specific example, we're going to take some assumptions on how you can pay it off. Let's take a $400,000 loan, 30-year fixed loan, and the loan term is 30 years, and the interest rate we're going to assume is going to be 6.5% interest rate. So if you pay that mortgage from day one, your principal and interest on your mortgage will be 28.27 per month for the next 30 years. And if you keep doing that every month, your mortgage will be paid off in 30 years. Now, the question is, how do you pay it off early? So now let's take another assumption. The assumption is that, let's say, and I'm just picking out a number, that you want to pay $450 per month extra every month. So now, if you take your mortgage payment of 28.27 and add another $450 and you pay that every month like clockwork for the next, well, not 30 years, but the next 10, 15 years. And we are also going to assume that you're going to start that at the first month of your loan payment. That means if you bought a house and you start that on the first month, on your first payment, that is the assumption. But you could say, well, I've got my loan for the last 3 years or 4 years or 5 years. You can still start. Obviously, you're going to save, knock off 3, 4, 5, 7 years, depending on how much your additional principal is. So, but in this example, we have to take these assumptions to explain to you how the numbers work. So again, going back, we are assuming we are paying $450 per month extra every month. We started that on the first month of the loan on a fixed rate of 6.5%. So what is the advantage and how do the numbers look? Let's look at this chart so I can explain to you. So the first thing you can see on this chart, what happens when you pay $450 a month? It shows that your mortgage repayment is shortened by 9 years and 11 months, which is almost 10 years. So let's summarize it. We had a $400,000 loan. We had a 6.5 interest rate. We paid $450 a month every year like clockwork. But hey, if you miss a few payments here and there, you may pay it off in 11 or 12 years instead of 10 years or 9 years and 11 months. But these numbers show you that your total current payment would be $25, $28, $27. With the accelerated payment, you would be paying $29.78 per month. So your total scheduled payment would have been $910,000 and $180. That is the life of your loan if you paid regular mortgage payments. But because you paid $450, or in your example, whether you paid $300 or $400, whatever, but in this example, your accelerated payments would be $716,768. That means you saved close to $200,000 in payments, but actually you save a total of $193,412 in the life of this loan. That's a big savings. By doing this, it shows that your mortgage repayment shortened by 9 years and 11 months. That's 10 years shaved off your mortgage payment just by paying $450 a month. Now you may say, well, I don't have $450 a month extra. I'm struggling to pay my mortgage payments. I can barely make my $2,500 a month. But that's not the idea that you pay $450. Pay $50 a month extra. Pay $200 a month extra or $500 a month extra, depending on your income, depending on how many income generating in your household. If you're a couple and you are both working, maybe you can save somewhere or do extra work, maybe 5 hours a week or 5 hours a month. Anything extra you can make, you can pay towards your principal. Like I said, this is a big commitment. It's not gonna happen. I understand because I have a loan myself. I've been paying for the last 30 years. I've owned several properties, but on my current home, I refinanced in 2016 and I got a 15-year loan and I'm making accelerated payments of $300, $400, $500, whatever I can make, I pay extra. So I'm gonna pay off that loan in 10 years. So a 15-year mortgage loan, which I refinanced in 2016, I'm gonna pay it off in 10 years. So I know this system works. I have a lot of clients that I recommend, pending their income and the struggle they have with the payments. Hey, pay extra $50, pay extra $100. If you get a bonus, pay it towards principal. If you get a tax refund or if you make extra money and do a part-time job or moonlighting work or extra work on Amazon or whatever, pay that extra dollars towards the mortgage. Now, a word of caution is I'm not a lending expert. I'm not a stockbroker or financial analyst. So anything you do, please consult with your accountant or your professional or your financial planner because these things make a lot of difference. But the key is that you get started. Since you're watching this video, I'm assuming that you have that urge to save money, whatever you can, and pay off that mortgage earlier. Or if you don't want to save, pay extra and pay towards your mortgage, put $100 in your savings account or your investment account or $300 a month or $400 a month. Or if you have kids, put it towards your kids' college account. Because I got news for you. Not only the home prices are going up, interest rates are going up, but imagine if you have a 2-year-old child or your nephew or niece when they come to college. College is expensive right now. I know because I paid for my 2 kids' colleges. It was much cheaper than what I have. A lot of people going to college, they're saying it's very expensive. Wait till 18 years from now, 10 years from now, college and schools are going to be very expensive. So you may want to start saving towards your kids' college education, start saving, or in 18 years, pay off your house. That's a good option so that when they do go to college in 10, 20 years, you have that extra leeway to pay for your kids' college and education or any other thing, medical bills. Maybe after 20 years when you paid off, you can buy another rental property or have the freedom. One of the most common reasons why people want to pay off mortgage early, like myself, is before I retire, I don't want to have any more mortgage payments. Or when I retire, I want to be debt free. I don't want to have any car payments. I don't want to have any appliance payments, credit card bills, mortgage payments, nothing at all. The only thing I would want is if I have rental property, which I do, I don't mind leaving that payment because the tenants are paying my mortgage and I'm getting the tax benefits. Again, talk to your accountant on how all this works. And one key thing that I did not mention is that before you start paying those extra principals, please check with your lender or your bank because some of them don't allow that or they have restrictions or, so do check with your lender. So there's a lot of ways to pay off your mortgage. This was a simple way to knock off 10 years of mortgage payment. In this video, I talk about 8 different hacks to pay off your mortgage. So if you don't like this trick, check out my other tricks. It's a very popular video. Thanks for watching.